无咪有？好，我来去。
我兄弟有能无错无理，有能准备爆老子，有能落来办高利率，有能做梦落小钱，有能做桥卡老板下，有能摸个大城市，我天啊，有能贪听我叫跟落做咩大生意，做爱叫做帅，往心爱叫做吹，我follow路等候吹，顿继续开始喂。
Hey guys, welcome back. This is Neo. Let's jump right into SoFi. Hey guys, I project SoFi Q1 2026 to have new 1.09 million members. Did SoFi disappoint? Not really. SoFi Q1 2026 actual membership addition was 1.1 million. Actually surpassed my expectation a little bit. Remember Anthony Noto has said that he was aiming 50 million members by 2030, by the year 2030. So if we extrapolate all the new additions quarter after quarter from this current quarter till the last quarter of 2030, if the growth rate, membership growth rate hold more or less the same as what I expect here. Next quarter, 1.14 million members. Q3, 1.19 million new members. Q4, 1.22 million new members. And then if it keeps on growing at this nice clip, 33%, 34% for this year, and then 31% membership growth for 2027, and then around 29.5% for 2028, and then 27% growth of members for 2029 over 2028, and then 26.7% growth for just 2030, which is highly durable. Then SoFi will be seeing 50 million members by the end of 2030. If everything holds, right? If everything holds, what does it mean? I'm checking my times here. If everything holds, this would be the project revenue growth as well, because remember what I have said. New members for this quarter has a profound hint of the upcoming revenue growth for the foreseeable future, because new member, at first, they will be using maybe just one or two products of SoFi. At first, just like you and me, download the SoFi app, and then we probably will just open a checking and saving account, so only one or two products. But months down the road, maybe we will start to use their credit cards or debit cards. Then we will be adding a couple of more products of SoFi. Then maybe another year, we need to go travel. We will use the travel facilities of the SoFi app, and then we will be using their travel products. And then we will buy travel insurance through SoFi. And then when our kids or your kids will be going to universities and colleges, you may apply for student loans via SoFi for them. Who knows? And then when you buy your next car, and right now, SoFi doesn't even have auto loans yet. They may announce any deal with such as Carvana or other national car dealerships. Who knows, right? In the future, or even Tesla and Rivians. Who knows? But then the point is, if in the future you may need to buy a car, refinance a house, and do a lot of other financial transactions and decisions, you may need to use other products of SoFi. So how the SoFi flywheel keep us in the loop, keep on looping, is how the same way Amazon, Alphabet, Google is keeping everybody in the loop, such as the executive members, the monthly membership that people pay. I don't even know how much you have to pay for the Costco membership, maybe $75 annual maybe, or 100 plus, depending on if it is executive or family memberships, I think. Why people are paying for those membership fees? Because they are expecting they will be gaining even more by purchasing more from Costco, right? So SoFi now they have a SoFi Plus membership, which is only $10 per month. For the $10 per month, you gain almost over $1,000 worth of discounts from various products, such as if you have the just basic checking and saving accounts, you will be enjoying higher APRs. And then when you borrow for your car loan or refinance your current existing loans, you may be enjoying lower fee, the initial transaction fee, the loan origination fee, plus lower APRs. And then when you buy travel insurance or book hotels via the SoFi app, you may be given higher discount rates and also better the coupons. Sometimes they have coupons, so you may enjoy more coupons. So in return, what you may potentially gain on an annual basis versus the membership fee, which is $10 per month or equivalent to 120 USD per year. So you are gaining more than $1,000 equivalent back every year. And SoFi is adding even more services and products in the future. So you will be enjoying much more than $1,000 back in return compared to the 120 per year that you're paying. So it's the same way how people are paying the membership fees for Costco, and because they're expecting the more they buy, the more they gain back compared to how much they pay for the annual membership for the Costco. It's the same way as the Prime membership for Amazon. You pay the Prime membership because you're expecting you're gaining much more back as a member of the Prime member system for Amazon. So it's the same way the SoFi Plus membership is just work the same way, just like a Prime member or executive member for Costco as well. So, okay, let's go back here. Now, the more new members, that means the more new products of SoFi will be used in the next few quarters. So I have always said in my channel that the number of new members added each quarter to the SoFi family of members is the leading indicator for the future revenue growth, because the new member may use just one or two SoFi products now by opening up a new savings or checking account, but over time they will be applying for credit card, debit card. They will book their next itinerary for their trips to Europe, to China, to other countries via the SoFi app. And those are different products, including travel insurance and how to book rental cars, hotels, etc. And then SoFi has many more products. As time goes by, they will be adding even more. Okay, before I sound too repetitive, let's move on. So what does it all mean? We've expected, SoFi internally expected how many members will be using how many products as time goes by. I have this projection based upon how the management of SoFi expect the existing new members for this year may be using how many SoFi products by next year, the year one, and then the new members of previous years may be using how many products for next year. So it's like a progressive growth of membership, and then progressive growth, even higher exponential growth of how many new products the current existing member will be using in the future. Is exponential, sort of, but not really crazily exponential. But you will see in this projection, because compared to JP Morgan and Chase, their membership growth over the year has only been about 10 to 17% annual, and then SoFi has been 33 to 38% membership growth annual for the last 5 years. But JP Morgan is about 11 to 15 or 17%, I don't remember. Either between 11 and 15 or 11 and 17% for JP Morgan for as far as membership growth is concerned, not revenue. But if we're talking about revenue growth, compound annualized growth rate, SoFi is much faster. It's 35 to 41% annualized growth for revenue versus JP Morgan is only between 10 and 16%. So I know a lot of people love JP Morgan and Chase because they have been around for many years and people are very used to shaking hands and walking into those branches. But what I've been recently listening to some of my uncles and some people who use Chase, they are saying their lines are long. And when you try to talk to a person who is specialized in the loan department, they don't have anyone available for you. You walk inside there, you expect someone is available for you to talk to you. No, you still have to wait, make another appointment, and they will give you a phone number. You have to call at the branch and then make an appointment. Or if there is a current person, which is a loan specialist, you often find that person is just busy talking to someone else because they already made an appointment. So even though they may accept walk-in, but you have to wait for that loan specialist to finish his discussion with the current person that is in their cubicle or office. So it is not that convenient. You don't know how much time you have to wait for them to finish their discussion. It could be 1 hour, it could be 2 hours. It's a long process. Some of them are very long process. And I have gone through that with Petelco Union. Last time before I bought this house, I tried to walk inside a Petelco Union bank, talk to a loan specialist. Luckily, they had a loan specialist available on duty that day. However, there were 2 people ahead of me. So I was advised to come back to the branch after, eating. So, okay, I sort of make an appointment, if you will. They say there were no need for appointment, but I kind of asked them, hey, if I come back at around 3 p.m., would it be okay that, I have a high chance of talking to the loan specialist? And then he said, okay, yeah, there are 2 people ahead of you. They don't want to leave. They want to sit there and wait. So by the time you come back, 1.5 hours later, you should be the one who will be talking to the loan specialist. Okay, after my lunch, I went back there. I think I still had to wait for about half an hour, and then I was able to talk to the loan specialist. Unfortunately, even though that was a Petelco Credit Union, they did not give me the best rate that I could get. At that time, actually, it wasn't Bank of America, it wasn't Wells Fargo, it wasn't Petelco. It was another bank. It was actually, I should not talk about those things. It's more personal. Okay, now let's get back to this one. What I'm trying to say is so inefficient. If I would do it again, now I know SoFi and I'm a member of SoFi, I would just go through with SoFi. They would be giving me the lowest rate. I am their member plus. I'm their plus member. So I could enjoy a very, very low rate. And they don't have physical branches. So they don't have that high cost for their maintenance and brick and mortar stores where you have to pay rent even though you're not 24/7 open to business. And you still have all those overhead costs hanging. My God, I feel bad for those big banks. And by the way, those big banks have been too big to fail during the 2008 banking crisis. So if you want to continue to support banks that have been too big to fail, up to you. I know a lot of people don't like being charged monthly, here and there, late fee, or even without doing anything with your account. Just keep your account open, your checking account open. They charge you $25 to $50 per month. When I had the Bank of America checking account, I was charged $25 per month. For what? For just keeping the account open, because they have so much inefficiency in their legacy system and they have so much overhead cost they need to cover in order to keep your account open. SoFi, no late fees, no account fees. Even if you just open a checking account, they give you APR, so you gain money. And the more you use SoFi app every month, you accumulate points. those points you can convert into real money. And I have converted over $774 back into my account already. It's real money, people. Okay, now if this expected, how I expect SoFi to grow until they will see 50 million members by 2030, then this corresponding revenue growth should happen, which is the market capitalization. JP Morgan, if it keeps this current state of growth of their membership and revenue, they will one day be over $1 trillion as a bank or financial institution. That would be 2027 if JP Morgan continue with their current growth rate. Okay, if SoFi continue with its current growth rate, members as expected like this, and then annual revenue growth between 35 and 41%. I'm not even talking about over 40%, okay, or 41%. Then SoFi will see roughly 200 billion market cap by 2031. Okay, the bank is growing, regardless of if the market, the stock market, recognize SoFi as a future leader in banking and digitized personal finance. Regardless if the market recognizes it as of now, SoFi is growing. There's no denying the fact that it is growing and gaining market share. The whole banking industry only grow 3 to 7% per year, but SoFi is growing 43% year over year for its membership. Then that means SoFi's growth is much faster than the entire banking and personal finance industry. Then that means SoFi is gaining market share. It's just a matter of time SoFi will become big. Since the earliest years of Amazon, when Amazon was starting in the late 90s and early 2000s, the entire digital commerce was not even there, was mostly non-existent, right? And then you have Amazon's not being recognized as future leader. But eventually, when people start to realize that, they have to chase highs and buy high. Amazon, before the stock split, the stocks was under $40 per share for so long, before 2008. If you bought Amazon in 2002 at $9 per share, let's say, and then it would be just $19 per share by 2007, and you will not feel that great because at that time a lot of other companies would have 5x, 10x for you already. The same way how you buy SoFi now, it seems like it's kind of a snail pace when it comes to their stock price growth, compared to the AI company which have returned 5x, 10x for the last just 12 months, 24 months. It looks like SoFi is growing at a snail pace, but no, because this right now is not in a hot industry. That's why. So if SoFi continue this growth, per share price, SoFi should see base case. These do not include the big banking business yet, and their future equivalent to AWS of SoFi, whatever the cloud system, and with AI capability for the institutional clients. No, I don't even include those yet. So these are the base case. 2025, $23.56 per share. 2026, $32.28 per share. $23.28 per share. 2027, $44 per share. 2028, $60 per share. 2029, $83 per share. 2030, over $100 per share, well over 100. But if SoFi, of course, the big banking business and also the equivalent of AWS of SoFi will be will see accelerated growth faster than expected by me, then SoFi will not take so long to be over $100 per share, of course, right? And also if the market is very, very pro financial institution, then it could be 2028, it could see $100 per share already. So this is just the base case. But eventually, it will be over 200, it will be over 1,000 by 2036 to 2037. Because I have my projection all the way down. I can show you more in the future with my next 25 years of projection. But this one is only for the next 8 years. All right. Compared to Amazon, Amazon year-over-year revenue growth 17%. SoFi is 43% as of Q1 2026. These are Q1 for other big companies, how they grow over the last quarter for last year. Okay, so 70% Amazon, Meta 33%, not too shabby. Alphabet 22%, pretty good. Microsoft 18%, Robinhood only 15%. After SoFi start to let members to buy and sell cryptos, look at Robinhood's revenue growth. OMG, right? Why people love SoFi better? Because remember, they have a bank charter. And because of various partnerships between SoFi and other financial institutions, whatever cryptos that you put in SoFi accounts are FDIC insured up to 3 millions. Up to 3 millions USD. So if your cryptocurrency, if you leave them in Robinhood account versus leaving them in SoFi account, which one would you prefer? If you want whatever that you deposit in this financial institution to be fully FDIC insured, would you choose Robinhood, which doesn't have a bank charter, or SoFi with a bank charter? And all your deposit of whatever cryptocurrency or fiat currency are all FDIC insured up to 3 millions. Of course, you would choose SoFi. You have that certainty. The monies are insured over there. See Robinhood? They are already seeing the hurt, the damage. Shopify, not too shabby, year-over-year growth. Expected for this earning report will be 31%. Still, among this group of high growth and stable company, watch what I said, high growth and stable companies. Among these many well-known companies, which one grow the fastest? I have already highlighted in yellow, 43%, SoFi. The revenue grows the fastest. Okay, SoFi Technology reported Q1 2026 earning of April 29, 2026, featuring strong year-over-year growth, including a 41% increase in adjusted net revenue to 1.1 billion and a 134% increase in net income. 143% increase in net income. People, what does it mean? It has huge implication. The revenue only grow 43% year-over-year. But for each of the dollar of revenue growth, SoFi is able to retain 134% more of each dollar of revenue. That means that income becomes higher to 166.7 million USD. Why? That means SoFi, due to its being digitized everything in finance, see very high efficiency. And when you are using the same amount of resources to serve higher number of members, and because of your low overhead cost, it becomes so much more efficient that per member, per dollar that they spend with SoFi app, SoFi retain 134% more compared to the same period of last year. That is how crazy SoFi is. Can you imagine just 5 years down the road, the net income will be 500% even higher than today? Do you think SoFi will not grow to $200 per share? OMG. You have to understand the short seller just want to have SoFi because he recognized SoFi is very huge with retail investors. If I were a short seller, I want to have my Hall of Fame or my cabinet with all the trophy of the most well-known companies too. Oh, I have short Amazon. Oh, I have short Tesla. Oh, I have short Meta. Oh, I have short Google. Oh, I have short now SoFi. See my cabinet have all these trophies. If I am the short seller, I want to do that too. I will short SoFi. Oh, then there is a huge follower community of SoFi technology that start to recognize my name. I'm a short seller. Oh, I'm Muddy Water. I am well known now because see, so many people follow SoFi and they have so many new members. Now they know me. Haha, they are scared of me. I'm muddy water. So that is part of their purpose. If he is really sure about SoFi being N1S type of misstatement of their financials, why did he not continue attacking SoFi and shorting more share of SoFi? Why? Why did he close his short position of SoFi? Why? Oh, so you just attack it, one trick pony? Oh, you pull your head, you have a bunny from your head. Oh, you don't have another bunny? That's it? Oh, that's it, huh? That's it. All right, oh well. He just wants to make a name of himself. He just wants to be known by people, by the investment community. Hey, I am muddy water. Because I have followed many short sellers. They attack this company, attack that company. For the time that I held the shares of Amazon had been attacked by 7 times by various short sellers. I was so scared, actually. I was so new to investing. I was so scared. But SoFi being attacked by short seller now, I laugh out now because I do my own due diligence. Okay, and you have to rely on the character of the CEO. It is unlike Elon Musk where he say a lot but doesn't follow up, is always overpromise and under-deliver. No, Anthony Noto is always under-promise and over-delivering. It's the exact opposite in the universe. My goodness. OMG. All right, adjusted net revenue grew 41%. Wow, to 1.09 billion. We are talking about a solid over 1 billion per quarter revenue. Now for SoFi, it will be included in S&P 500 soon. Okay, people, it is so solid. Remember Trading Desk, which was included to S&P 500 last year, 2025? That was a horrible decision. My God, that company did not even have control of the data. Why would some analysts, right, or decision makers in S&P 500 made that mistake, right? Yeah, so it is always a learning process. I do not understand every single industry either. For example, I do not understand medical industry and the complicated reimbursement, so I never touch their stocks. So when I heard people follow ARK, invest, Cathie Wood, to buy a lot of those, what do you call it, medical company, or all those things, and they keep on crashing. Oh my God, well, why do you follow someone when you don't even understand the industry? At least you have to have some form of basic understanding first. Oh well. Okay, net income rose 134% to 166.7 million. Adjusted EBITDA, earning before interest, tax, depreciation, and amortization, increased to 62% year over year to 339 million. It's crazy. Excuse me. Oh, let's have a sip of coffee, people. Okay, total members grew 35% to 14.7 million. It's crazy. The momentum is crazy. Total products increased 39%, even faster than the growth of members, to 22.2 million. OMG, loan origination, I'm so sorry, rose 68% year over year to 12.2 billion. Lending, adjusted net revenue grew 53%. 53%, it is crazy. It's crushing every matrix in the lending segment. It's even faster than Lending Club. Lending Club is going gaga on a lot of lending, but still faster than Lending Club, driven by 39% increase in net revenue, interest income. Financial service segment net revenue grew 41% to 428.5 million. Technology platform is the only one that see decrease in revenue. Why? Because Chime, 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 just signed an agreement with SoFi. They would not use SoFi platform. They will be internally making their own platform. But I have seen company leaving the AWS of Amazon and eventually signing back up with them. So who cares, right? And Anthony Notos already said there will be 9 or 10 new institutional clients lining up for the next 12 months. They will be more than cover the loss of Chime. Okay, so it's growing, but this quarter we have to recognize the loss of Chime. So that's why it's 27 year-over-year decrease. That's the only weaker points of SoFi Q1 2026, if you will. Key takeaways: profitability. This marked SoFi 10 consecutive quarters of GAAP profitability. GAAP is generally accepted accounting principle. Okay, so it's the accounting standard used by USA. Deposit growth. Total deposit grew to 40.2 billion, which is crazy. If you have so much deposit, that means you can lend them freely to members. Okay, so when you lend this money to members, because these are deposits of SoFi, that means SoFi can just earn the interest spread. For example, if they lend money to you and me at, let's say 10% AAPR, and if they are just paying 4% to those people, right? SoFi is paying 4% plus and minus sometimes, and then so that means SoFi can earn the 6%, the interest spread, which is 10% charging you and me for the loan, minus the 4% that they are giving to the members who make the deposit in those accounts, checking and saving. So 6%. So that's why with more members, the second good thing is not just expecting the future more SoFi products will be used, but also more deposit means more money can be lent out, and SoFi can just earn the interest spread. That is crazy. That is really crazy. So good for future growth of SoFi, with over 90% of average total liabilities comprised of deposits. Stock reaction. Despite the record results, shares fell 13% on that day, yeah. As investors expressed concern regarding the slowing technology platform, which I have already talked to you about, and CEO Anthony Noto has addressed that issue, there will be 9 to 10 new institutional clients lining up for that technology platform business. So those clients will be more than making up more than the loss of Chime. And the company not raising full year guidance because right now Anthony Noto, the CEO, is not expecting any rate cut. He is more on the cautious side. But what if the transcript flip? What if the new Federal Reserve Bank chairman coming on board soon say, oh, he expect at least one rate cut? Then SoFi will be in favor again, and it will be all over $30-40 per share again. Nothing is financial advice. As of Q1 2026, SoFi members are using a record 22.2 million total products. See, not even SoFi see higher numbers of new members, but those new members, those all existing members, they are using more products of SoFi over time, okay? So the flywheel is there. The snowball effect is there. With 14.7 million members, this represents an average of roughly 1.5 products per member. Right now it's 1.5 products per members. If in the future it becomes 2.25 products per member, when people become more cozy using SoFi app. Such as the first couple of years, people only may purchase once or twice from Amazon.com. But over time, it's like my uncle. He used to only buy once and he was so scared. And then the second time, the third time, by the fourth time, he became so content with the service ability of Amazon and the fast shipment. He becomes so satisfied that now he purchases every other week, I think. OMG, maybe 2,000 to 4,000 worth of product from Amazon by my uncle alone. But he used to not trust Amazon. Just like how he last year, when I introduced to my uncle SoFi technologies, he did not trust SoFi, but now he is using SoFi. He has a checking and saving account, and he has a new credit card from SoFi. See, Okay, so with cross-buying rate using more than one product accelerating to 43%. Whoa. The growth is driven largely by financial service products, 19.3 million of them, and lending products, which is 2.8 million of them. Okay? Excuse me. So this will be just the highlights that we have gone through. And then the next, let's take a look at what the market is doing, right? There are a lot of people who are not trusting the current state of the stock market. As of late April 2026, US money market fund assets have reached a near record high of approximately 7.64 trillion. OMG, people are keeping money on the sideline. OMG, while the AI is building out crazily. So people may not trust the AI trade, right? Because they have been going up crazily. Some companies saw over 10x over the last 12 months alone. I'm not even mentioning SanDisk. And then you have people who have missed so much of this upside. Then if they are on the cautious side, SoFi, banking, financial institutions are usually more stable, growth companies. One just need to look at other banks, other financial institutions such as American Express, MasterCard, Visa. All these are long-term stable growth company is what SoFi is about also. So if people have missed the AI trade, would they be more inclined to buy some of the shares of this stable growth company? Of course. And SoFi seems to be very stable growth now. And it's growing faster and faster too. And next, let's take a look at their financial result page. Okay, let's take a look here. All right, guys. SoFi investor presentation Q1 2026 April 2026. All right, let's start with the not disclaimer. Okay, so highlights Q1 2026 as we have discussed. Revenue grew 1.1 billion, 41% year over year. Adjusted EBITDA, earning before interest, tax, depreciation, and amortizations of 340 million, 31% adjusted EBITDA margin, which is wonderful. And GAAP net income of 167 million, 15% GAAP net income margin, which is wonderful. Last quarter was only 13%. This quarter is 15%, so margin expansion is there, while the revenue and net incomes are growing. And adjusted earning per share of 12 cents, which is wonderful. Fee-based revenue, 387 million. That is a 23% year over year, representing a 36% of adjusted net revenue. Cash revenue, 1.1 billion in line. And financial service and tech platform revenue contribute 504 million, which is 24% year over year growth. Record loan originations of 12.2 billion in the quarter. Credit remains steady. So consumers are in good shape, okay? In line with expectations. Total deposit grew 2.7 billion quarter over quarter to over 40 billion as we have discussed. Tangible book value, which is important. For each shares you buy of SoFi, you gain more of the company. The tangible book value grew 336 million quarter over quarter to 9.2 billion, which is wonderful. Just for one quarter, OMG. And then set new records. Okay, these are the highlights of the branding strategy. Set new records in members and products, 1.1 million new members, 1.8 million new products. Drove brand awareness to all-time high. Unaided brand awareness reached a record 10%. Wow, 10% is great because Amazon at one point, I remember 2007, I think at that time Amazon had only maybe 12-15%. I will have to check. Okay, I will check next time and then I come back to this because I forgot to check and have it to be a reference point. But I can check. And I believe SoFi right now is almost 2026 of Amazon. 2026. Because Amazon by 2008 suddenly the unaided brand awareness went up very nicely. And okay, I will remember to check back on this next time. Reflecting SoFi string as a trust brand name. X-Buy, cross-buy continues to accelerate. Cross-buy is people using one product and then use other product of SoFi, and then they have referral to SoFi partners as well. Reached 43%, 7 points higher than the prior year, demonstrating the power of our everything app strategy. Launch of big business banking. SoFi will seamlessly provide fiat and crypto banking to businesses on a single regulated platform, allowing them to operate in real time. Enhancement of SoFi Plus. See the SoFi Plus membership account that I talk about, 10% per month, and you gain over $1,000, much more than $1,000 worth of goodies per year. SoFi Plus relaunches with expanded benefits and is now exclusively available through a fee-based subscription. So previously, you can just have your direct deposit and then you'll be qualified as a Plus member. But now you are required to pay $10 per month, which is very low compared to the Costco membership, compared to your Prime membership and fee-based subscription. Of course, in the future, it may increase if there will be more benefits as a Plus member, right? So delivering durable growth, which is very important. The growth has to be continuous, durable, and accelerating, okay? And strong returns. As we have seen, the net earning grew 134% year over year, while the revenue only grew 43%. So the return is exceptionally strong. It's 3x, growing 3x faster than revenue. Continuous innovation and branding. So this would be the continuous innovation throughout the years. A diversified digital financial service platform built through a relentless focus on innovation. So at first, they were just mostly focusing on mortgages and personal loans. The company start from Stanford alumni services. So they service the alumni of Stanford University. You know, they need mortgages, they have personal loans, they need to refinance their student loans. So they start from student loans actually, right? Student loans, refinance their loans, student loans, and then mortgages. When they graduate, they need to buy home, right? And then personal loans, of course, they need to go on vacation, they need to do car buying activities and other finance activities, buy out business, business buyout, get a loan, open a new business. SoFi launches in school loans to current students. I think that one is for Stanford students. SoFi Money, SoFi Relay, which we will discuss about all these different products in the future. It will take a lot of time. SoFi launch Invest and Pioneers fractional shares. Yeah, fractional shares of stock is, for example, you want to buy SanDisk, which is now $1,200 per share, but you only have $500. What can you do? You cannot buy a full one share because it requires you to pay upfront $1,200, right? But you can buy fractional shares via SoFi app, which is equivalent of $500. So if you want to invest your full $500 in your account for the fractional share of SanDisk, you can. So it would be about 0.4 share of SanDisk then, right? Because each share is $1,200. But you have $500 to invest in their share, then maybe 0.38 or 0.4, 40% of one share. So you can through SoFi app. So, and then they have SoFi Protects, SoFi credit card, etc., and then financial technologies, and oh my God, there are a lot. You can read through this. Oh, okay, well, why not just read through this? Galileo Financial Technologies, the next generation payments and financial products platform. They're using both internally and externally, also for their other institutional clients as well. SoFi launches Lantern Credit to match users with lending partners. SoFi acquires Technisys, a next-generation payment and financial product platform. SoFi acquires Windham Mortgage, strengthening its home loan technologies and fulfillment capabilities. SoFi launches home equity loans, which is huge at that time. SoFi expand its loan platform business with $2 billion deal with Fortress, and now SoFi saw 10 billion deals last year, and this year there were 3.6 billion more added, and we are not even the second quarter is not even ending yet, so we are having a lot of new loan demands. SoFi expands its invest offering with mutual funds and alternative investments. SoFi launches SMB financing marketplace. SoFi partners with major brands including Wyndham Hotels, Southwest Airlines, United Airlines, and T-Mobile. SoFi launches Pay SoFi Plus subscription. SoFi launched AI-driven capabilities with Cash Quote. This is huge, okay? Eventually, this will become the agentic AI that help everybody save, invest, and categorize how we are spending, and may suggest how we could improve our financial situation by not doing what and doing what. So we will see, remain to be seen. SoFi launches SoFi Crypto. SoFi launches its own stablecoin, SoFi USD. SoFi launches big business banking. There we go, people. Okay, now let's take a look. Everything else for SoFi. One-stop shop strategy as a app-based financial channel. Get your money right. SoFi has developed a suite of financial products that offers the speed, selection, content, and convenience that only an integrated digital platform can provide. They have member banking, credit card, invest, loans, crypto, etc. And there will be even more in the future. You can read through this. It will take a lot of time if we go through it together. And then the brand building, reaching 10%. With the upcoming 2028 Olympics, where SoFi Stadium, the most expensive and technologically advanced stadium in the United States, by that time, the brand awareness of SoFi will be much higher. Not only will the opening and closing ceremonies will be held in that stadium, but various other big games throughout the event, the Olympics events will be held in that stadium as well. So people is gonna hear SoFi many times. CAGR, compound annualized growth rate. Members, wow, it's keep on growing, 14.7 million. 4 years ago, 5 years ago, OMG, only 5.2 million. So wow, it's growing, gaining market share, and this is the productivity loop flywheel of SoFi. Okay, so people don't just use SoFi money, right? Money is their checking and saving account, so they would also over time use SoFi app to make investment. For example, buy shares of companies or buy mutual funds and buy other government bonds, if you will. Then SoFi Relay, SoFi Credit Card, SoFi Crypto, Lantern Credit, SoFi at Work, SoFi Protect, loan platform business, home loans, student loans, personal loans, members one-stop shop, super app. So we will talk about each of these categories. It will take another 2 hours. Okay, so productivity loop. For now, that is all we need to know. And then cross-buy accelerates to 43% in Q1 26, demonstrating the power of the first spin power loop. No, financial service productivity loop. All right, so the rule of 40, remember as software company, they always pride themselves the number that they can show per the rule of 40, which is the revenue growth plus the EBITDA profit margin. EBITDA, remember, earning before interest, tax, amortization, and depreciation. So now SoFi year-over-year revenue grew 41%. All right, and then the EBITDA profit margin is 31%. So if you add up the two, it should be at least 40. That's what it's saying. As a software company, it has to be at least 40 to justify that it is having a good growth rate. But SoFi is not 40, it's not 50, it's not 60. SoFi is 70 plus 2, 72. Look at that, 72 out of the necessity 40. SoFi is crushing it. It's crushing it. Oh, all right. And then the adjusted revenue growth, oh my God, is so much. If we extrapolate to 2028, is 7.8 billion, almost 8 billion per year. OMG. We are talking about a double. Between 2025 and 2026 is only 4 billion. And then once it is 2028, is 8 billion. It's a double. It's a double. Well, or just a double from 2025 to 2028. That is fast growth. It is faster than Shopify, actually. Shopify takes 4 years. SoFi takes 3 years to double its revenue. Wow. Adjusted earning per share, it will be so crazy. It's another double. Look, from 60 cents to over, wow, it's another double. Just in 2 years, it's another double. That is fast growth company. And growth opportunities continue the strong loan growth, driving net interest income and fee-based revenue, refinancing nearly $1 trillion of prime loan U.S. credit card debt with SoFi personal loans. Wow. Approximately 400 billion student loans refinance opportunity at current rate, even if the rates will not see rate cuts. Even at the current rate, we have 400 billion sitting right in front of the company as the addressable opportunity. OMG. Imagine that. OMG. Rate as well as in school lending. Gaining share in the massive home loan markets through purchase, refinance, and home equity. Taking share of massive deposits and investment markets with less than 1% today. Wow. To drive growth in interchange and brokerage fee revenue. Well, definitely, right? Innovation through new business initiatives across crypto, AI, big business banking, and SoFi technology solutions. Wow, it's so, this company is just growing left and right, almost firing all cylinders, except for now, only this quarter, the platform business, where we just lost time. But then once again, SoFi CEO has mentioned there are 9 to 10 companies, big institutional clients lining up to take over the loss of Chime, and then will be even grow faster. SoFi is bringing the strengths of a nationally licensed bank to the forefront of digital financial services. SoFi Crypto launched Q4 25. SoFi Pay, right? SoFi Crypto become the first nationally chartered bank to launch crypto trading for consumers, allowing members to instantly buy dozens of cryptocurrencies directly from the interest-bearing FDIC-insured deposit accounts. SoFi Pay launched Q4 25. SoFi enhanced its unprecedented money movement offering with the launch of SoFi Pay, which leverages blockchain technology to allow members to send money to over 30 countries in a fast, seamless, low-cost, and safe way. SoFi USD launched Q4 25. SoFi became the first nationally chartered bank to issue a stablecoin on a public permissionless blockchain. SoFi USD will be backed by cash at the Federal Reserve Bank with no credit, liquidity, or duration risk. Remember that. And will underpin future initiatives across the company. So compared to any stablecoin that is made by, for example, Coinbase, those have risk, not FDIC insured. but this one is Fed insured. Okay, Big Business Banking launched Q1 26 will provide fiat and crypto banking to businesses on a single regulated platform featuring regulated business deposit accounts with institutional-grade safeguards and enabling real-time API-driven payments allowing for 24/7 money movement. SoFi Code 26 expansion. SoFi Code will leverage AI to provide insight across all areas of financial activities building upon cash growth. SoFi Code will answer questions, provide investment and lending options, help set and track goals, and simplify time-consuming processes. SoFi Technology Solutions. SoFi 26 will relaunch a new go-to-market strategy. Will offer enterprise clients with a wide range of services including processing, banking, core, ledgers and services, payment hub, and risk and fraud protection. This will power growth across banks, fintechs, and consumer brands. All right. That is the performance of SoFi Q1 2026, people. I believe this bank is continuing to grow, not just a bank, but also a financial institution in digitized format. OMG. SoFi digitized everything finance and banking the same way Amazon digitized everything personal purchase and commerce. Happy investing, people. Happy long-term investing. Nothing I am saying is financial advice. Please also be advised to do your own due diligence and we'll be happy investing along the way. Thank you for watching. Thank you. I appreciate you guys.